Hi, how are you? It's Mathis Connor here with Connor Management Group, and this week we're here to look at another stock for you to consider buying. This week we're looking at the best consumer non-cyclical stock to buy right now, and today is Thursday, January 10th, 2014, and this stock, the industry it's in is beverages dash brewers. The 12-month upside potential we see at 35.8%. So that's some nice appreciation potential, and we'll get into discussing the name of this company. The name of the company is not, familiar to most people, and it's Molson Coors Brewing. The famous Coors commercials that, it's pretty hard to miss on a weekend of sports, that's for sure. The ticker symbol is TAP. The industry they're in is in beverages-brewers. And once again, we see the 12-month upside at a very healthy 35.38%. Some quick facts. The business summary of Molson is Molson Coors Brewing Company manufactures and sells beer and other beverage products. The company sells its products in Canada under the Coors Light, Molson Canadian, Molson Export, Molson Canadian 67, and a list of other brand names. But end of the day, they sell beer and they sell it worldwide. The website can be found at www.molsoncoors.com. That's MOLSONCOORS.com. The company is headquartered in Denver, Colorado. They were founded in 1873. The number of employees they have stand at 18,700. Once again, the ticker symbol is TAP. The sector they're in is consumer goods. And let's see, beverages and brewers. The annual revenue for Molson over the last 12 months stood at $4.2 billion. Their net income at $494 million, and the cash from operation over the last 12 months is $1.2 billion. So this company generates quite a bit of cash flow. The capitalization of Molson stands at $10.2 billion. On this slide, it's some pictures from the website. We've got the logo Molson Coors, and a picture of a frosty Coors Light beer, at a football stadium with a backdrop of the snowy mountains, which is a pretty common theme in the commercials, at least here in North America. To the left, there's a list of about 6 other beers that they have. In other countries, actually. There's a famous Amstel Light, but they have a number of other beers that I'm not familiar with, Aguila, Apantisca, Azteca, Virgin beer, it seems like. So these are probably all just other varieties of beer or varieties of the American brand name. On to the next slide, taking a look at some of the metrics of Molson Coors. The annual revenue stands at $4.2 billion over the last 12 months. The net income, $494 million. And once again, the cash from operations over the last 12 months has been $1.2 billion. The operating margins in 2012 for Molson Coors was 18.1%. And in 2013, the past year, the operating margins have been tracking at 21%. So we're definitely seeing some improvement, which is definitely a good thing. The trailing PE right now stands at 20.5, and the forward PE ratio is at 13.4. So that implies some healthy expansion of earnings is expected by most analysts with that type of range between trailing and forward PE ratios. The PEG ratio stands at 3.6. It's not that cheap. But let's see. The price to sales is at 2.4, and the price to book is at 1.2, pretty low. and the enterprise value to EBITDA is at 16.7. So this is an interesting group of valuation metrics. On the one hand, you get the PE ratios implying that quite a bit of earnings is expected to expand. The PEG ratios maybe slightly high, getting slightly rich. Then the price to book ratio is pretty low at 1.2, and the enterprise value to EBITDA is, seems a bit rich at 16.7. And we might see some conflict here of what's cheap or not, but this is probably just a representation of the fact that this company generates so much cash from operations. I mean, cash from operations of around 25%, $1.2 billion against annual revenue of $4.2 billion. And you just don't see that proportion all that often. And I'm sure that kind of explains these valuation metrics in an indirect way. All right, on to recent pricing. Yesterday's close of Molson Coors was $55.26. The 52-week low, let's see, 52-week low, I don't have that right. My 52-week low numbers, high numbers, I think are off. I'll follow back with those on the next slide. But the 20-day moving average have at $54.85. The 50-day moving average of $54.28, and the 200-day moving average of $51.51. So pretty, reasonably tight differences in the moving averages. The average volume of Molson Coors stands at 871,000 shares per day. The beta is at 1.0. Beta 1 says that the stock tends to move with the broad general stock market in general, and the dividend yield is at 2.3%. So healthy, decent dividend yield. And the average dividend payout ratio stands at 34%. That's the average of the last 5 years. And on to the chart for Molson. And as expected, the 52-week low of Molson is somewhere around $47, and the 52-week high is somewhere around $56. So the stock has steadily declined, not in a smooth trend, since the end of February of last year. I mean, end of February of last year, the stock price was around $48, and it's oscillated, and it's gotten up as high as $56 in the last 3 months, and now it's around $55 is where it settled down. So the company has gone through a modest, not necessarily steady incline in price, but definitely an incline in price, increase in price. Just to summarize, the financial statement quality of Molson Coors is actually very good. They have some debt, but the debt they have due in 5 years, it's pretty manageable at $3 billion. And their revenues at $4 billion a year, so that's not much of a problem. Their sales have steadily increased over the last 5 years, and their earnings are expected to increase over the next year. They've been doing their financials are a reflection of them doing a lot of different things that are moving the company forward. I think it's part of what we believe is the reason for the upside. I mean, they made an acquisition in 2012 that's going to help boost the stock price, we believe, in the next year. They experience a bunch of one-time charges in 2012 that they won't have to now deal with at all in 2014. They've been going through a number of cost-cutting efforts. They've announced plans to retire some debt. Also, they see their market share increasing in Eastern Europe at this point in time. So they've been doing a lot of things that, at the end of the day, we think is going to create some nice upside for the stock over the next year. So, the balance sheet, the financials look good. And as we mentioned earlier, the operating margin trend is improving and might improve even some more beyond 2014, that's for sure. So the price trend, as we noted, it's increasing. Overall market outlook, we're still bearish. Definitely not bullish right now. The recent closing price for Molson Coors is at $55.26, and our model predicts a 12-month price target of $75.04. So that 12-month appreciation potential, that's 35.8%. We think that this company has some nice upside. They're doing several things right, and they're doing it well. On to our closing slide. If you haven't already, sign up for our weekly newsletter. You can get it by going to gmcstockpicks.com. On that newsletter, you can find out about great stock picks like this one, as well as just other information about the stock market and what's going on, and just some nice, good educational information. And just to remind you, if you're new to this, is that the stock tip was driven by our proprietary algorithms, where we review over 3,500 stocks every week, and this is a result of our program. So we're new, and we want to show people how good we are. So please go subscribe, and you want to unsubscribe, you just one mouse click and you're done. But we think you'll like it, and check out our website, and talk to you soon. Take care.